Hello guys and girls, and welcome to the Falcon YouTube channel. Hope you're doing really well, and if you're joining us for the very first time, make sure that you are subscribed and you are in the loop with all the videos that we've got coming on a regular basis. Each and every week we'll be providing value to you on your trading journey. And speaking of on your trading journey, I remember when I started in 2008, I originally started off with stocks, and one of the very first things I learned amongst different types of strategies within this was the core elements of patterns. Reason as to why patterns repeat themselves. And as my understanding of patterns has constantly evolved and my own unique twist on lots of different things, I've realized that out of all the different things I've learned from some incredible people in the trading space, I've always gone back to my roots of patterns. It's what resonates with me. There's more than one way to do things, more than one way to trade the markets effectively. But what I found is that patterns repeat themselves, humans repeat themselves, these things are replicatable. What we need to understand is a unique strategy that we can replicate, systemize over and over again. So I've always gone back to that. Structure is key. Structure repeats itself, and it's something we can visually see over years and years of data. And that gives you confidence. As after all, when you're trading in the markets, you don't just want a strategy, you want to be confident, something that you can visually see over and over again. So I'm really excited to show you our take on why we believe structure is king, why it's effective for us, and something for you guys and girls to consider and look into, and maybe even add to your own repertoire, if you like, of your trading space. So really important to just look at it from a bigger perspective, come in open-minded as well, and maybe you'll learn a thing or two. But let us know your thoughts. Keen to get into it, as I'm going to dig into the charts now and show you what I mean on a few pairs so you can dissect that information, go away and absorb that knowledge. Right guys and girls, so I'm glad you're enjoying all of the content that we've been putting out on the Falcon channel, and I thought it would be a great opportunity just to show you something very briefly, as we get tons and tons of questions about our charts, about naked price action, why we look at patterns, all these things. And I thought it would be a great opportunity to just show you why we look at the things the way that we do. Remember, there are so many different ways to trade the market effectively, and it's really about your personality, what resonates with you. So what I'm going to do now is just show you with a few examples. So we've got dollar CAD, we've got Aussie yen and pound dollar, about why we look at structure, why it's been a big part of my trading, and why I've continued to put this throughout countless strategies that I have learned and developed over the years. And I've always started off with patterns from the very day one with stocks. So let's take a look. So we've got USD CAD here. What I firstly want to bring your attention to is this. Think of it like this. The natural laws of the market, which we can see, which is tested for over 30 years, is moving in impulse and correction. So we have impulsive waves, we have corrective waves. Now, as I've said, there's lots of different ways that you can, of course, put different indicators, support resistance. You can put, Bollinger Bands. You can put so many different things involved in that, and you'll be able to find a way that it works. But for simplicity, if simplicity resonates with you, then perfect. So think of it like this. We have an impulse, we have a corrective structure, then we have an impulse. Now, within these patterns that you see, there'll be various different names that people will have for them. People will call it a flag, people will call it something else. It might have a slight variation and call it a pennant. That's not so much important. What's important is that we can correlate the consistency of these structures playing out over and over again. They happen on the higher time frame. So as you can see, we're on the weekly chart. They happen on the higher time frame, and they also happen on the lower time frame. So they're happening on various degrees. So the higher time frame shows us the bigger picture. Lower time frame is mainly just for entry, to be completely honest. So just by understanding that concept, we're able to correlate this for years and years and years and see what is replicable, what repeats itself. Remember, trading in a zone, each bit of price action is unique. Essentially, in a simplistic term, if we look at that bit of price action, if I was to say, go away, so let's say, for example, you may be someone coming to the channel, you don't even have a strategy right now. As a bit of homework, take a blank chart, pick any currency pair, go and find something that looks like this. I can almost guarantee you'll find hundreds of examples of something that looks like that. You'll be able to find this structure. But what you won't be able to find is lots of those examples where the candle shape is exact, like by like by like. So although that we can see the structure correlates, And we can find lots of examples of these in the high time frame and the lower time frame. Each candle tick by tick is not going to be the same, but that's not what we're looking for. And this is why you need a strategy to be able to trade it. The natural laws, it's simple. You could go online and type in trading chart patterns and you can find an ascending channel. Doesn't mean that you know how to trade it. Doesn't mean that you know how to look at it. Now, we look at patterns in a completely unique way. These are my own findings that I have developed over the years with things like patterns within patterns. People in the Falcon community will know that. But let's just take a look at this. So we have what we call a flag here. So we've got an impulse, what I referred to at the original part. You have a correction. So you've got an impulse, correction, continuation. If you've traded for a while, you'll hear reversal patterns and continuation patterns. This is just a continuation pattern. This is nothing complex. This is just a bear flag. Actually trading that bear flag is very different. So let's say let's get a vertical line. So just so we can remember. Now we're going to go to the daily chart. We can start to see that a little bit clearer. So essentially, this is the impulsive leg that we're looking for. So you'll see this on our charts with our students. We're looking at this all the time. We're looking for these impulsive legs. Why are we looking for them? Well, we don't want to be caught too much within here. Now, there are ways that you can trade the range, lots of different strategies. But ideally, what trader would want to be in this versus this? Very few, right? And remember, what do the amateurs do? They buy the highs and then they sell the lows. Why do they do that? Because of fear of missing out, all kinds of other things. They see price go up, 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 up. They think they're going to miss out and they start buying at the wrong time because they have no strategy, no education, and they don't know what they're doing. What do they do on the flip side? Price goes down, down, down. They think it's going to keep going down and they're going to miss out, and then they start buying the lows. So again, catching traders on the wrong side of the market. These patterns are repeating themselves. Why? Because humans repeat themselves over and over again. So if you lack education, you'll keep falling into this trap. You need to get educated if you're serious about this game. So now we can see and we can agree that we have this structure, an impulse, we have a corrective structure, we have a push down, right? Now pay attention to the vertical line. So if I go to the 4-hour time frame, it doesn't really matter what time frame as such, by the way. But let's say I go to the 4-hour time frame. What can we see? So as we work our way down, we can see we have similar structures. An impulse, a correction, impulse, correction, impulse. This is something that we call a running channel, which I won't go into too much detail. This is, again, you have to learn the strategy. But we have an impulse, correction. But this is all one big impulse as a wave as a whole. But as we work our way down to the lower time frames, we see that, right? So if I take this tool, which is called bars pattern, by the way, doesn't matter what strategy you're trading, you can utilize this. It will help you out. You can get a few lessons. So just grab that tool. And if I move this to here and I expand this, and just move this a little bit bigger, right? What do we have? If I go to the daily chart, now, let's remove this vertical line. Does that look similar? All right, if I just put that there, does that look similar? I can even put that side by side. What is similar in this? We have a push down, we have a long corrective structure, and we have a push down. What do we have here? We have a push down, we have a corrective structure, we have a push down. So what's happening? Well, what you can see is that this structure on the lower time frame and on the high time frame, it's the same thing. We're looking at it on the higher degree and we're looking at it on the lower degree. So this repeats itself over and over and over again. And then what you can do is go to any currency pair, go from the weekly to the daily, 4-hour, 1 hour, keep going through, and then you'll just find these patterns in impulsive legs. So impulsive legs to the upside and to the downside. It's the same thing. So now we know structure correlates. I just want to show you something on a few other currency pairs. So hopefully this answers all the questions, because all the questions is how do you look at the charts this way? Why is there not support? Why is there not this indicator? Why is there not that? You don't necessarily need it. It's what resonates with you as a person. Do you prefer less on your charts, or do you like to have all these different things? Literally entirely up to you. You can find a way to make it work. What we found is simplicity works very, very well for us and thousands of students. So let's say we go to the daily chart. Now, not everything's going to be, picture perfect, right? So you have to learn to read between the lines. You have to have a methodical approach to what you're doing every single time. That's what we look for. We're always looking for the same thing over and over again. And again, with your experience and understanding of any strategy, you'll get better at execution. But what can you see here? So with Aussie yen, we get this push down, and what do we get? what's very similar to what you just saw on dollar CAD? Push down, corrective structure. What do we follow by? Push down, corrective structure, push down, corrective structure, push down, corrective structure, push down, corrective structure. And then this is just forming another pattern, but we don't need to go into that. But what can you see? A follow on here, right? Big corrective structure, push down, corrective structure, push down, corrective structure, push down, corrective structure, push down, another corrective structure, push down, another corrective structure, push down, and now we're forming current price. So it's the same thing over and over again from when? 2013, right? 7 years. Just like that. It's the same thing over and over again. Now, if I was to take, let's say, we take this bit of price, we take it here, put it side by side, as you can see, it's the same thing that's happening. So what happens here? We get a push down and a corrective structure. What do we get here after this? If we just separate this pattern separation is something that we have, is a term that I created in the Falcon community. So if we have push down, we have a corrective structure, then we get a push down followed by another one, we get a push down followed by another one, then we get a push down followed by another structure, push down followed by another structure. Can you see the correlation here, right? This bit of price action is not relevant to this bit of price action here, but yet it correlates. You can see that there's consistencies within it. So we're finding consistencies in these patterns that just repeat themselves over and over and over again, always will, always has done. It doesn't mean that this is the way that you have to trade. I'm giving you an example of why we trade this way, why we look at these patterns over and over again. So what is really the difference between people that succeed in this strategy or fail? Well, persistence is one. Lack of understanding is another one, why people give up, because they see it looks easy and they think they should get it in 1 or 2 or 3 months, or they just don't do the work essentially, or they think it's something it's not, right? So they don't follow the rules. It's actually very simple, the things that we're looking for over and over again. You just got to study enough. And the people that are patient, they get the rewards. But again, Aussie yen, it's not even a currency pair that I trade too much. It's not one that actually comes up over and over again. I'm trading it at the moment, but it's not something that comes up all the time. So we can pick out any currency here. Pound dollar is a great example of how these structures just correlate. Again, same thing. What do we get? We get a push down, we get a structure, push down. This is one big, pretty much 5 years, I believe, corrective structure, push down, a messier structure, push down, corrective structure, push down, corrective structure, push down. See, same thing happening over and over again. So hopefully this answers your question as to why we're looking at these things. And that's just one pattern that I've showed you. There's multiple different patterns that we look for. And what you've got to understand is there's so many different variations within, of course, Brexit there, but typical how that was just a flag to push to the downside, but we won't go into that. But what I'm saying is there's so many different variations within here, and all you need is a strategy. So you can see how the market is moving. It's moving impulse, correction, impulse, correction, impulse. And then what that does is it makes up different structures and different patterns. Now, I'm not to say that the market moves like that every single time, because sometimes price is just messy. If you take different currency pairs like Aussie Swiss, Kiwi Swiss, it's not going to be the same. Euro Swiss, sometimes price is just ugly and you just have to deal with that. But for the majority of what we're dealing with here, we're looking at what we can deal with in the majority scenario. How is that replicable? How is that repeating itself over and over again? What kind of patterns can we form and see how that plays out? And then we work our way down, and then we're looking for our strategy, how we can execute on these structures. How can we buy? How can we sell? What is the longer term? What is the short term that we can capitalize on? You can do short term, you can do medium term, you can do, of course, long term as well. It's entirely up to you as a trader. That's the great thing about the strategy. It gives you that flexibility. There's a reason why, if you go back to our older videos, which is why we was looking for this bit of price here, selling this all the way down to target that low. There was a 90% probability that selling here, and you can go back to the older webinars, that we was going to tag this low before we start to move to the upside. Took a period of time. Did we hold all of that trade? No, we didn't. Right? That's not the point. That's showing you the room that we've got to be able to execute on the position. How much we capitalized in there, there was multiple trades that we did capitalize on, but we didn't hold the whole move. If you do want to do that, it takes a bit of patience when you're holding through the longer term trades. And when you are holding through the longer term trades, sometimes, it pulls back a little bit too deeper for how you would manage the trade. And then there's just no way for you to stay into it because, dealing with a 40% pullback is just very unlikely. You have to have rules in place, but learning how to strategize is really, really important to that. So essentially, for all the common questions that are sent in, why do we look at patterns? Hopefully that gives you a bit of an answer. Of course, I can't go into the whole strategy here. You wouldn't be able to learn it even if I did, because it takes time. There's processes that you have to put in place. There's rules that you need to follow. But as you can see, just from these, I pick any currency pair. You can go and do your homework and use it as a testing thing. What I would do is, if you're thinking about joining us as a quick test, you can go see that happening over and over again. And our goal as a trader, essentially, if you think about it, we're capitalizing on these impulsive legs as much as we can on the high time frame, on the lower time frame, medium term. And then we have rules in place that we follow that fits our personality and our plan. And that is what is giving us that edge over time. So hopefully that gives you an insight into that. But again, I thank you for joining us on the channel, tuning into the content. Hope this gives you some clarity, as we do get so many questions on the subject. But again, remember, there are so many great ways that you can trade the market. I've been trading since 2008. And when I first embarked on my trading journey, it originally started with stocks. Patterns was something I traded from day one. So an ascending channel is still an ascending channel. It's nothing new. It's how we trade it is unique, because you're not going to find that in the book. You're not going to find patterns within patterns in a book. You're not going to find the way that we enter in a book. There's going to be different variations. If you take an ascending channel for an ascending channel, well, you can say that's a reversal structure, have your stop above here, have your entry here, just sell it, and just sell it. Well, you're going to be tagged in, tagged out. There's so many different things that you need to learn. And this is what I've done. I've evolved my understanding over years and years and years to have the most consistent accuracy of things that just repeat themselves over and over again, with great risk to reward, and of course great management. And if you can stick to those things, then you set yourself up for success in the market. So again, thanks for tuning in to the episode. Let us know your number one takeaways, or if there's any extra insights that you would like to know, let us know in the comments. And of course, hopefully you're taking as much value away from our videos as humanly possible. And for the Falcon community as well, thank you for tuning in as always, and the support and the love. It does not go unnoticed, and we're really excited to keep pushing out the value for you guys and girls. So have an incredible weekend wherever you are in the world, and I will speak to you all soon. Stay safe, everyone.